All right, guys, what is up? Today is currently Sunday, and if you know me, Sunday I always go on the charts, and the first thing I do on Sunday is I clear the charts in order to prepare for the next week when I'm doing analysis. The reason is because when you have too much stuff on the charts from previous trading days and previous weeks, it can affect your trading because of all the stuff that's happening that was from last week. So when you're looking for a new setup, a new trading setup to make money, you're confused from old analysis and you're looking at the market based off an old point of view. So clearing the charts is the number one thing I recommend doing. And yeah, so here's basically my supply and demand / fair value gap strategy that I use on gold. And I want to show you guys the first thing that I do. So tomorrow, which is Monday, at 1 p.m., there's going to be US dollar news. It's going to be I call it an orange market. An orange market is a market that has medium volume. So because of that, there will be some movement in the market tomorrow, and that can affect gold. And because of that fact, I can actually look forward to seeing an opportunity to trade gold because of the fact that the market is moving. So the first thing I want to do is I'm on the 4 hour. I like to go from the 4 hour and I like to go and make sure my chart is on full screen. And once I do that, I then want to go and zoom all the way out. That's the first thing that I normally do. I normally just zoom all the way out when I'm trading, and it allows me to see the relevant trend that I'm trading. So yeah, guys, the first thing you're going to do is when you go on the gold chart and you go full screen, you're going to see gold and price is going to be like this. It's going to be in the middle of the screen. But what you want to do is you want to make sure that, like I said, zoomed all the way out, and you want to make sure price is visible so you can see the relevant, like I said over and over again, the relevant highs and lows. Now, how do we know what's relevant? Well, if we know we're in an uptrend, it's obvious that we're in an uptrend on gold, but why is it obvious? Okay, so let's break it down. An uptrend is when we have, oh, sorry about that. It just fucking maximized. An uptrend is when we have higher highs and higher lows. So when price goes up, comes down, goes up again, comes down, goes up again, which is what's happening with gold. Now, the highs and lows would be what? They would be this. Let's circle them. Our current high is here because price is currently at this point. Our current our previous high is here because this previous high got broken. Our previous low is here. Our previous lower low is here, and our previous high, our lower high is here. So in total, you see those 5 circles that I drew, and they're highlighting the actual highs and lows that maintain the trend / maintain market structure. So when the trend is changing, there's a disruption on gold. Like, for example, when the trend is changing, I like to call it a break of structure / change of character. The character of the market is changing. So if the market goes from being in an uptrend and immediately starts going into a downtrend like this, then what's going to happen is the market's character has changed because we went from being in a uptrend, which was right here, and to now being into a downtrend because price doesn't have enough demand, and that, sorry guys, price didn't have enough demand, and because of that, supply exceeded demand and caused the market to fall in value. So price went from being at a high point to a low point. And now that we know that, here's what I like to do. We can look for potential supply zones because if you're selling, you're looking for supply zones, and if you're buying on demand. So sorry guys, that's my YouTube ad. I was playing some music, so the ad just popped up. So if you're selling, you want to sell high because selling high means you're selling at a more expensive high price, and when you buy, you want to buy low at a discount level. So I only trade 2 setups: fair value gaps and order blocks. I would find most likely a fair value gap here, which would be my supply zone, and I would wait for price to come back to my supply zone and give me a entry here, and I would take my risk to reward tool and I would enter. And before calculating my take profit, I always make sure I'm cool with my stop loss. So I always want to know how much I'm risking before I get into a trade. So my stop loss is going to always end at the end of my supply, of course, and then I'll take profit either at the next high or I can find another form of liquidity that I can take profit. Now on gold, right now we're in an uptrend, so things are a little different. So we just broke a new high on gold on the 4-hour. I used the 4-hour time on gold for a long-term trend, and the highs that maintain the trend are these. So we have one high here. We have a high there. We have a low here. Our current high is here because price is currently there. And our current low is here. I mean, not current low. Our previous low and previous highs are here. Our previous. So our real previous high and low is here because price just took out this new high, making this the new high. And so our previous high and low would be here and here. And our previous high and low would be here and here. Now, since price broke this high, that's telling me that the uptrend is continuing. And especially because we're on the 4-hour time frame. On the 4-hour time frame, that matters. It matters that price has broken a high on the 4-hour, because to me that's an all-time high. All-time highs and lows on gold are always going to be on the 4-hour for me. That's how I trade. So now I know that I'm going to be buying low. I need to look for possible demand zones / fair value gaps and order blocks that I can look to trade and buy off of. So I already see one order block. And if you guys know what an order block is, there's basically, I'm not going to go over it in this video, but I mentioned it in other videos, and you can also look at it in my free Discord. But order block is basically a demand zone, I will say in this video, and this is one of them right here, right? That's a demand zone. That's my demand. We have that block here, and the zone itself, where I'm drawing the zone off of, is just order block right here. That's my demand zone. And when price comes to that demand zone, I'm expecting price to react off of it, which is why I'm drawing it in a box in the first place. So right now, I'm waiting for price to come down and break the current trend it's at right now, the micro trend on the 30-minute chart. And here's another tip, guys. So on the 30-minute chart, whenever you see, not 30-minute, but whenever you're looking at a trend and you see all those wicks, like you see at the top of the market, you see all these wicks. You see one wick right there. You see another one right there, there. This lets you know that the momentum of the market is going to shift soon, and that market is losing demand. It's losing buying momentum. And it means that there may be a possible reversal soon. And so that's telling me that the market can come down and I can wait for it to tap into my demand zone. And so finding demand zones, the key to finding them is to know where you are in market structure. Like I know I'm buying, so I'm buying low, right? And I also know that I can use multiple time frames to actually find my demand zone. So this is on the 30-minute time frame, which is where I found this zone in the first place. So what I'm going to do is I'm going to mark up the zone how I actually mark it up. So I marked it up to show you guys where it is. I'm going to mark it up how I mark it up. So that's the gap itself right there. Order blocks, I mark up differently. I actually have an already set tool that's already labeled for my order blocks / my demand zones. And so I'm waiting for price to come down to my entry. And this is going to be labeled 50% order block, because order blocks get filled 50% of the time. Not 50% of the time. They get filled 50% of the block, not time. So, well, I could technically say that too. So here, I would enter there, and okay, so where will my stop loss be? I want a tight stop loss because I'm trading smart money concepts. I'm not trading retail, so I don't need to worry about having low drawdown. And if I do, that means that I was at the wrong entry. So that's my stop loss, as crazy as that looks. That would be my stop loss if I was entering off an order block. And if I was entering off of this gap right here, I would enter here or possibly here. And then my stop loss would be bigger. But since I'm trading gold, especially since this is on a 30-minute time frame, I like my stop losses to be tight. So I almost canceled the recording. I'm actually going to wait for price to come down, and instead of entering right away, I'm going to wait for price to actually show me a reaction off of this actual box right here. So yeah, guys, that's all I'm pretty much doing on gold, and that's my outlook on gold. It's Sunday. The trend on gold is bullish. Now all I'm doing is waiting for gold to lower its price so I can buy gold again. I don't buy gold when the price is up because it makes no sense. When the market is up, people have FOMO at the top and have fear of missing out here, and they think that everything is going to continue going up. But I need to wait for the market to go down before it goes up. And sometimes the market won't do that. Sometimes if you go on the 3 minute on gold, which is what this time frame I use, sometimes, hey, it may not come to this zone. It may go and it may continue going up. That's fine too. But the whole key is doing the analysis and identifying these zones / these demand zones, supply zones, so you actually are aware that they're there in the first place. So if this does fall, you can have an idea of where it's going to and potentially trade based off that knowledge. So yeah, what I'm doing right now is I'm going to wait for gold to drop, and if it drops, I'm going to wait for it to take out 2 of these lows here to change in order for me to see that the trend, the micro trend of gold is changing. And yeah, and if I'm buying, I would just, if I'm only buying gold right now, if gold continues to go up and takes out the highs up here, because that shows me that there's more demand than supply in the market, and I can get into a trade up here. And so yeah, that's all it is. It's just waiting. It's being patient and waiting for your setups rather than trying to force the market to do what you want to do. And yeah, guys. So yeah, there's 2 types of, remember, there's 2 types of market structure, and I want to go over this again, or 3 types of markets. I only trade when the market is when there's an orange or a red market, right? So an orange market is basically a market that has medium volume, and a red market is a market that has high volume. So when there is no volume, I call it a yellow market, and that means that there isn't any volume whatsoever in the first place, like at all. So here's the difference. Orange market looks like this, and I'll color it orange so you guys can actually see the difference. Orange market looks like that, right? And we'll take it and drag it. Orange market looks like that. So we have medium volume, so we can potentially find trades. So that's a good time to trade. Red market looks like this. So there's such high volume that the market, instead of pulls back a little bit, instead of pulling back and retracing all the way down to fill in inefficient price action, instead of doing that, the market's going to go up and expand and then come back down a little bit. You've seen that. And then it will go up again, come back down a little bit, go up again. And then it makes it hard for you to find your supply and demand or your order blocks or your fair value gaps. And let's color it so you guys can see the actual difference. Notice in the orange drawing, the market, when it's making its pullbacks, which is here and here, the market always came down far every single time, versus here on the red market, when it's time to pull back, the market pulls back a little bit and then continues going up exponentially, like fast. That's because there's so much volume that, like I said, the market doesn't have time to go all the way down and fill in and come down and fill in insufficient price action all the way down to these demand zones down here. So yeah, so when the market has high demand, like high demand, it isn't always going to fill every single demand zone. So you need to be aware of what market you're in. But when the market is moving a little bit, when there's what I call the orange market, medium volume or volatility, then the market will come and fill in inefficient price action at a more stable area, at a more stable price level. So a yellow market is when the market is not moving and is consolidating, and it kind of looks like this. It kind of looks like that, and we'll color it yellow. So the last drawing that I drew is a yellow market. Orange market and the red markets are the only markets that I trade, guys. I don't trade any other market but that. Yellow market, I don't trade because the market isn't moving. Some people trade. I trade with smart money, and I trade institutionally, and I trade supply and demand. So there's not enough demand and supply in this. Like you see in the yellow market, there isn't enough. You can trade these little movements and get that little bit. But when I trade the orange and red, all I have to do is basically trade less times per week, and I can make a lot more profit. I can just do like 5 trades a week or 4 trades a week and trade these bigger trades rather than try to consistently blow my account trying to trade consolidation when the market isn't even active. And so, yeah, guys, that's pretty much it. I hope you guys got value out of this. And yeah, So just let me know if you guys need any help. And yeah, so join my free Discord. It's free. I know I'm not going to sell you guys on a bunch of stuff. I know you guys are tired of that. So I want to see if I can show you my Discord. If it doesn't, all right, there it is. So in the Discord, I have a daily trade setups chat, and every single week or a trading day, I'm always posting in this trading. Um, I'm always posting in this trading chat in my trade setup. So every time I have trade setups, whenever I make a trade, you guys always see it. And not only do you see my trade setups, you see how I entered, you see it labeled, 3-minute market structure trend, highs and lows that maintain structure. Okay, you see that highs, liquidity taken out, confirming that demand, 3-minute. And so all these, I give these little bubbles that label everything that's happening inside the market. So inside what was happening in my mind, so you can see how I trade. And so the fact that you're seeing this and you're seeing these visual representations and you're seeing how these screenshots, it helps your brain train to trade like me, if that is what you want, because there's other traders in my group that have their own strategy and trade like that. And that's the free part of my group. I do have a paid section. I don't do any courses or anything like that, guys. I do one-on-one directly, one-on-one, straight, face to face, and I basically go over where you're at in your journey. I see what your goals are. So if you're telling me you're looking and hopping from strategy to strategy, I want to know, like, okay, so you're hopping from strategy to strategy. What are exactly your goals in trading it? Like, what is your plan, and how are you going to get there, and what are you doing now to get there? And if they're confused, they don't have the right info, instead of piecing it together by themselves, watching thousands of YouTube videos, some of them prefer to just pay me and do it one-on-one weekly, because it's better to have someone hold your hand and show you step by step than watch thousands of videos and try to learn and try to figure it out. And some videos are good. YouTube is a good place. I have tons of YouTube videos for free. But if you're really getting serious and you want to start an actual business, you're not going to start a business for free if you just get realistic. Okay, the only way to start a business for free, which technically not a business, is growing an audience, which you can do in this generation for free. But otherwise, if you want to make money, you're gonna have to spend money. That's how it works. Now, I don't make you pay $1,000, 400. I don't make you pay $200. I don't do any of that. I do monthly. I do direct rates, so you get 2 to 3 calls a week with me, and I charge about $150 per month. That's not a lot of money at all. And if you think that is a lot of money, then you definitely should not be in trading at all. You shouldn't even be in business. You shouldn't be investing. You shouldn't be in business. You shouldn't be doing anything if you think $150 is a lot of money. And I understand if you're not in a place where you can afford that, but if you're not in a place where you can afford investing in, not even just me, investing in someone maybe that's different from me that you saw, or your own way, if you're going to be afraid to do that, then you're not going to get anywhere in life. So yeah, that's all I have to say. Because you're gonna have to pay for your trading account. You're gonna have to do all this stuff, and it requires you to spend money. So if you can't do that and you don't want to, then I suggest that you guys just stay at a job and save up until you can invest. Because if you want to make real money and you want to get out of fantasy land, you're gonna have to spend money and actually work with someone, be mature, and do the work. Because that's what it requires. But because that's how I got trained. I didn't get trained. I didn't watch a course. I got trained one-on-one mentorship. And if I can't do one-on-one, I rather pay extra to join masterminds and join their extra coaching or insider, because it's way easier. Because most people, they'll show you stuff and they leave it to you to figure everything out, and then they don't show you all the details. But I'm here to show you all the details. And if that's something you guys are interested in, then I want you guys to be a part of that. But yeah, we have the I don't know why my screen just changed, guys. Sorry. We have the Discord here. We have all the stuff here. We have basically everything that a trader could want. There's tons of traders that are active. I don't have the biggest group. I only have like 40 something members. I have 38, 39, 44. I have 42 members, 43 members. I always post everything I trade, everything I do, my gold trading strategy, my gold trading before and after. I show the before and after of my trades, everything. There's also a YouTube section, so you'll always get to see every single YouTube video in each section. So that will help you guys. And I hope this was helpful. You can join the chill out room too. I'll just post like music and shit like that. It's kind of fun, guys. It's fun. It's a good group. I have a chart gallery so you guys can see examples and steps to enter the trades. Like here you can see steps. If you want to screenshot that, you can. I don't care if you guys are like, oh, I found your strategy. That's not my. This is not my strategy. This is just some steps to help traders find more gold trades. And yeah, if you want to screenshot that, go ahead. I don't care. But yeah, guys, I hope this video helps. I have a chart gallery of the fair value gaps that I trade, all the fair value gaps, what all my trade setups look like, market structure, so you understand how to trade trends and understand how to find a trend, so you can actually find the trade setup. But yeah, I'm gonna end the video here. I hope you guys liked it. Peace.